Hey guys, Jared Wesley here of Live Traders and back for another weekly trading lecture and a short weekly trading review. As you guys know, I've been away in Japan for the last couple weeks or so. I haven't had an opportunity to really upload anything of high quality. So what I thought I would do this week, because I just got back and I had an opportunity to talk to the chat room and do what I consider to be a very powerful and very important lecture. And today's lecture topic is on building a trading plan. See, a lot of you don't think that's a very sexy topic because, well, you're going through a lot of information and not a lot of it is charts. So many of you guys focus on charts. And trust me, charts are important, but money management and trade management and building a trading plan is far more important than those charts. So it's a little bit longer of a lecture. It's about 45 minutes to an hour, okay? And it goes through the topics and discusses the things that you need to consider when building a trading plan. A lot of people think you can just slap some words on paper and magically you have a trading plan. But one of the things that a lot of traders forget is that a trading plan is a very personal thing. You can't just copy somebody else's plan and expect it to work for you because you're different than that person. A trading plan is a very individualized thing, and to be honest with you, it's not something you can fully accomplish when you're brand new, okay? So it's going to take a little bit of trading under your belt to really tweak your plan. So you'll put a plan together before you ever start to trade with some of your ideas and thoughts, but then as you start to trade and learn and experience and understand yourself better, then you can tweak the trading plan. And I go through that in this lecture, okay? It's a very, very, very important topic. So many of you out there are trading without a plan, all right? Could you imagine walking into a bank asking for a business loan and they say, hey, where's your business plan? And you go, oh, I don't have one. But hey, can you give me $250,000 to start a business? They would laugh you out of the building, okay? Many of you traders out there are actually gamblers because you don't have a plan. I get it all the time in the chat room. People will get into a trade and they'll say, hey, Jared, where should my target be? I sit there and wait a second, you're already in the trade? Uh-huh. Well, how did you get in that trade without knowing what your target would be, or at least how you're going to get to that target? So if it's an all-time high, you don't know what the target is, fine, but maybe it's a pivot management, a bar-by-bar management, a moving average management, an all-or-nothing management, something like that. These are the things that you have to know and understand. How long it's going to take you to succeed. What are your entry rules? What are your exit rules? What is your money management rules? What is your plan for raising your risk or lowering your risk? What's your continuing education? Are you tracking your trades in a spreadsheet? Do you have a trading journal? Guys, this is a serious, serious business. You want to know why everybody thinks traders, day trading is a joke and that it's not a real business? Because most day traders are a joke and don't treat it like a real business. If you actually watch them, you'd think they were just a bunch of gamblers in Las Vegas. So I understand why the general public has no respect for this industry, because most of you don't respect this industry either. This is a systematic way to make money, and building a trading plan is how you get to the point where you want to be. It's your road map to success, okay? So it's about a 45-minute to an hour lecture. Before that, I wanted to quickly go over a couple trades I took the last couple days, guys. One is on MMM. I'll put it on the screen right now. This is a pre-market breakdown off of a good gap. The reason I'm bringing this trade up on MMM, and I'll bring up a trade on Tesla in a minute, is because so many of you out there think I only trade the 3-bar play. This is not true. I love the 3-bar play. It encompasses probably half of the trades I take, but I do trade other things, breakdowns and pullbacks and so on and so forth. So you can see here on MMM, it was a pre-market breakdown. When the stock broke the low of the pre-market, we got in right around 166. The stop loss was 167. The full target was 164. Unfortunately, we didn't get the full target, which would have been like $700 or so. We ended up making $500 or $600 on MMM because of the nice gap, the relative weakness to the market, and of course, the pre-market breakdown. Now on Tesla, a little bit different. It's a long play. Okay, and it's a 1 minute breakout, again, on a decent gap, but I'm showing you again the versatility here. It's not a 3-bar play. We got in at $235. We had about $1.50 on the stop loss, $233.50. Unfortunately, on this one, guys, I tried to add back to my position over $235. There was a great opportunity to add to Tesla, and my platform had a glitch. Something went wrong, and I was unable to add, so I was only able to manage out a few hundred shares on this instead of 500 or 600 that I really wanted. We were going to add and then tighten the stop, and we would have ended up making about $1,000. Ultimately, I ended up making 500 or 600 bucks on it. It is what it is, guys. So I just wanted to show you those two trades, guys. They happened in the last couple days just to show you that I don't just trade 3-bar plays. I trade pre-market patterns sometimes right when the market opens. I trade breakouts intraday on the 1 minute, 2 minute, 5 minute chart. I trade pullbacks. Versatile. You guys, when you're new, you should be taking 1 or 2 patterns and mastering them, and I go over that in this trading plan lecture. So don't think just because it's a trading plan lecture that it's not valuable. It might end up being the single most valuable lecture that I've ever put out there, okay? So I hope you enjoy the lecture. As always, guys, if you want a 30-day $1 trial to the chat room, email info, I-N-F-O, at livetraders.com. $1 30-day trial. You come watch me trade with my real account number open, my fills, all that. Not some charlatan BS where somebody says, oh, I turned $500 into 6 figures in 48 days. No, you didn't, okay? Real stuff, guys. All right? $1, 30 days, info at livetraders.com. You'll come in there, you'll understand that we use trading very seriously. We take trading very seriously, guys. I'm not there to push the button 58 times a day. We're there to take 1, 2, 3, maybe 4 trades a day, make our money and move on in an hour or 2 a day, okay? That's a professional approach to trading. Professional trading strategies can help you with that, and also go to the website and download our free ebook. All right, so enjoy the lecture on how to build a trading plan, and I'll see you guys again next time. Trading plans are a very important part of success in this particular business, and I'll take it one step further. Business plans in any business are a very important part of success. So I've done something here that I haven't done in a very long time, and what that is I've actually used a decent amount of slides from professional trading strategy. Usually when I do a lecture, I add maybe 1 to 3 slides from professional trading strategy. There's about 10 in here. There's 525 pages in professional trading strategy. So to get 10 slides in one lecture is the first time I've ever done it. I don't, like I said, I usually use 1, 2, maybe 3 slides. So hopefully this will be a good experience for you guys. Some of you who have taken professional trading strategies will recognize some of these, and some of you who haven't will, well, you're lucky they're in here. So a trading plan, guys, is your roadmap to success. It's your guide to success. It's something you have to be successful. And unfortunately, many of you out there, I dare say most of you out there, are actually trading without a plan. And it boggles my mind. And one of the reasons I think people do this, and we've talked about this before, is there's nobody guiding you. There's no boss to tell you you have to do this. It's important. And if you don't do it, I'll fire you. And that's probably the single most challenging part about the trading business or the trading industry, is that you're self-reliant on being honest with yourself. You're self-reliant on being good. And not everybody is a good self-manager. Let's be frank about it. Not everybody is a good self-manager. So building a trading plan is paramount to your success, okay? So what I call this here is a planning cycle of success. And you're going to go over this wheel over and over and over again. And it's going to start with planning. You're going to write some notes down on paper. Now remember, when you're a new trader, okay, like brand new, greenhorn, all right, you are not going to be able to create the world's best trading plan because you simply don't have the knowledge and experience to be able to do that. So your plan is going to be a malleable, flexible experience, really forever. But that first year is where you will make the most progress in your trading plan. And the hardest part about improving your trading plan, which we'll get to as the last phase, is being honest with yourself. You're going to come into this business with preconceived notions, not only about the business, but about yourself, right? You're going to come into this business. I always use this analogy, so maybe you've heard it before. You might feel like you're a very patient person, a calm person in, quote, the real world, outside of the trading game, right? You might come in and go, yeah, I can wait for 2 hours for a ride at Disneyland. I'm good. And yet then you find yourself trading and you're on a 1-minute chart and you can't hold for 35 seconds. And you go, wait, how can I wait for 2 hours for a ride at Disneyland, but I can't hold a trade for more than 35 seconds? Because trading is different than what you experience day to day, okay? So it preys on your emotions. So your original plan will be something that changes, dramatically changes. And the reason it will dramatically change is because when you go through the implementation process, it's not going to likely end up the way you thought it would. So you'll plan, you'll put stuff on paper, and you'll think, you're the greatest gift to mankind, and you'll put together this awesome trading plan, and you're going to go out and have 10R targets and blah, 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 this and that. Then you'll try to implement it. Really, it should say try to in parentheses. And then you're going to measure the implementation, assess those results, and then go about improving upon it. This is the area you're going to shock yourself. See, you'll measure it, which is what a trading plan and what a trade tracking spreadsheet is for. And then you'll make an assessment, and you're going to look back and go, oh my gosh, in fact, we just had this happen, right? Somebody in the room here last week just said, Unmal was talking about it, just said, had I followed my trading plan to the letter of the law, I would have made something like 5 or 10 times more money. I think they said 9 times more money or something. So after you measured it and you go back and assess it, and you go, holy shnikes, my plan really does make money, but I'm having trouble making money within my plan. And believe me, it's challenging. It's more challenging than you think, because most people lie to themselves. It's like when you ask somebody you've never met, oh, hey, I play tennis too. You play tennis? Oh, yeah. Are you any good? Oh, yeah, I'm good. And then you meet them and they're like a 1.5 player, and you're a 5.0 player. And you're like, yeah, okay. Maybe amongst your friends you're good, but in the real world, generally speaking, you're not that good. Well, in your mind, you're really good. But when you measure those results, that will tell you if you're actually good. And this is the single hardest part for people, is to admit, I'm just not as good as I thought. And then you'll have to go about making adjustments and improvements. And here is the problem, okay? Believe me, guys, we have a lot more slides to get through. I hope I can get through this in 30 minutes. I really hope I can get through this in 30 minutes. Most people think they know what they're good at. They're usually wrong. More often, people know what they're not good at. And even then, more people are wrong than right. Okay? So, now, you think you put a plan together, you implemented it, you measured it, you assessed it. And you go upon the improving stage. Most of you think the improving stage means meditating more, or telling yourself to be more patient. Think about what I'm saying. It's happened to some of you. You look at it and you go, well, geez, my plan makes money. My plan's good. My plan doesn't need to change. I need to change. Right? This is what most of you are saying. My plan doesn't need to change. I need to change. Wrong. I'm not saying you don't need to change. Okay? I'm not saying you don't need to change or be better. But more than likely, you're going to have to make some adjustments to your plan so that you're able to follow it. I almost lost out on this business in the sense I almost quit because I was so rigid with my plan when I started. I didn't realize that month after month, it wasn't me that necessarily needed to change. It was my plan that needed changing because I couldn't ever follow it. And if you've tried for a couple months and you're not making progress, you need to back off on the plan. For example, guys, for those of you that are, 80s and 90s kids, Mike Tyson's Punch Out, right? You don't start with Mike, you start with Glass Joe. Imagine if you got Mike Tyson's Punch Out and every day you start it with Mike Tyson. How frustrated are you going to be for months at a time? Months at a time. You need to learn the buttons and how how you move and all that other stuff. What was his name? Mac in there. And then you start with Glass Joe, you build a little bit of confidence. Then you move on to the next guy, and you move on to the next guy, right? And finally, by the time you get to Mike, you're actually ready. And even then, he probably still knocks you out the first time that you face him. Even then. Even when you've beaten 10 guys prior, he probably still gets you. So imagine if you started with him first every time. It will be an unbelievably frustrating experience. And this is what most of you are doing. You're putting a plan together that might be okay, and then you're saying you need to be better, not the plan needs to change. It happens to be both. Both things have to happen. You need to be better, and your plan needs to make some adjustments to help you be better. Okay? It's like putting a center in basketball at the point guard position. It's not that the center is a bad basketball player. It's that they're at the wrong position. Okay? And this is for most of you true. All right? Okay. So, you need a sensible approach to this business. I'm not going to spend as much time on some of these slides, guys, because we'll be here for 4 hours. All right? There's about 13 slides I need to get through. All right? And we have about 30 minutes to do it. So, assumption is expectation. Now, you're thinking to yourself, what does this have to do with building a trading specific plan? It has everything to do with it, because you won't be around long enough to implement your plan if you don't listen to these things. All right? Your beliefs when entering the trading business. Why is this question here? What are your beliefs when entering the trading business? They're probably unrealistic beliefs because you've listened to some marketing pitch or spiel somewhere that made you think you're going to be successful in 3 to 6 months and you're going to be, making 6 figures a year in your first year. Wrong. If that happens, you'll be like the 1/10 of 1%er. Okay? And yet some of you still think you'll be that. All right. So I'm asking you this question, what are your beliefs when entering the trading business? Because those beliefs will have a dramatic impact on whether or not you succeed. What do I mean by this? If you come in thinking this is a 3-month business and it takes you 6, you're going to quit. You will. You'll quit. It's like, oh, it's taken too long. I should have been a millionaire by now. It's been 3 months. Well, that's because you came in with wrong or incorrect beliefs. If you come into the business with a reasonable, sensible approach, saying, it might take me 1, 2, 3, 4 years to get good at this, you're not going to quit after 6 months. You'll give yourself a realistic opportunity to succeed. Most people in this business fail for 2 main reasons. Their money management is terrible, so they risk too much too soon, don't take stops, and they don't give it enough time. They simply don't give it enough time. Okay? So, it usually, in my opinion, takes 2 to 3 times longer than you expect. So if you thought it was going to take 6 to 12 months, I'd give it 24 to 36. That's being realistic. Okay? Now, I want you to think about where you're at in life, and everybody's at a different spot, right? You can go probably learn how to dig ditches in a day, but you can't learn how to be a NASA physicist in a day. See the difference? Trading is much closer to being a NASA physicist, even though it's not that hard. Okay? My point I'm making is, think about life in general and how long it takes in general to truly become very good at something. Good enough at something that somebody would pay you for it. Generally not 3 to 6 months. Maybe there are some sales type jobs out there where people will, you can learn the ropes quickly. But most jobs take a college degree or an 18 to 24 month internship or some type of apprenticeship. Okay? More than likely to be where you're at today in your career, it took you 3, 5, 10 years. Why should trading be different? Right? If it took the current job this long, when you first start with a company, they don't make you manager with no experience. Okay? So I want you to think about being realistic with your approach is really, really important. Okay? Now, as I talk about all the time in here, money management is everything. 2 simple rules. Be objective and use common sense. Respect and protect your account, guys. You earn the right to raise risk. And we're going to talk about risk levels as we go through this trading plan. Okay? But money management is your number 1 job. Blowing up a trading account is not a badge of honor. It's not cool. It's not part of the learning process. It's just dumb. Straight stupidity. Okay? There's nothing cool about it. All right? So money management, protect your account first. This means don't risk lots of money when you're new. $5 a trade, $10 a trade, nothing more. I don't care if you're Warren Buffett, Jeff Bezos, Bill Gates, whomever you are. I tell them the same thing because you're going to likely lose your first 6 months, first 12 months. You want to lose less while you're learning. It's your number one job, okay? Every trade we take, guys, this is basic stuff. I'm putting it out here for the new people that might just be stopping by for a day and don't know how we operate here at Live Traders. We never, ever, ever, not ever take a trade, okay, without these three things: entry, stop, and target. If you're taking a trade without any one of those things, you're gambling. You're not trading, you're gambling. You want to know why most people think traders are gamblers? It's because most traders are gamblers, right? If you watch the average trader trade, might as well just put them at the blackjack table in Vegas, because that's what they look like. Because they don't have an entry, stop, and a target, or a trading plan, which we're discussing today. Okay? So every trade, even if you don't know your exact target, because maybe it's an all-time high, you know what your approach is to getting there. Bar by bar trail stopping, all or nothing, so pivot management, okay? You know, you have a plan to get there, even if you don't know the exact number of your target. One of my biggest pet peeve questions I get in the trading room is, Jared, what's the target on that? I'm like, wait, you're in a trade and you don't know? You ask that question before you take the trade, not after you're already in it, right? So entry minus your stop loss is how much you're risking on the trade. That's how you determine your share size, right? So if your entry is $20 and your stop loss is $19.80, you want to risk $200, right? Well, you need 1,000 shares. 1,000 shares times 20 cents is $200. If you lose, you will lose $200 plus fees, maybe a little slippage, okay? If you win, maybe you're shooting for 2-to-1, 3-to-1, 4-to-1. I don't know. Maybe you're doing bar by bar management. Maybe you're doing pivot management. Every trade has an entry, stop, and a target. Now, to some of you that have been around for a while, you're going, Jared, this is really basic stuff. I get it. We'll get to the good stuff soon. There's a lot of people that are new that don't know. In fact, you know what? It's even worse. There are a lot of experienced traders that don't do this. Without an entry, stop, and a target, you're just a gambler. You're just like the average trader. And the average trader in this business fails. Okay? Money management's number one. And how do you mitigate? With an entry, stop, and a target. Period. All right. Guys, here's some examples. This is why you have a stop loss. Okay? I'm not going to spend much time on this. This is why you have a stop loss. You see this right here? It's a beautiful 3-bar play. Wide bar, narrow bar, rip. Oh, no rip. Right? Wide bar, I always say wide bar, narrow bar, rip. It's not wide bar, narrow bar, rip. It's wide bar, narrow bar, holy shit. Okay? Wide bar on the downside, couple small bars, and then get crushed. You're in this at $48, and now it's at $40. Okay? Your stop loss on this was about 30, 40 cents, but it's down $8. So what's that? 20, 30, 40, $8 divided was a 20-to-1 loss? That's unacceptable. Entry, stop, target. That's why we take our stops. Guys, you don't believe me? You don't believe me? This really happened. You say, I didn't make this up. It's right off of StockTwits. I took the person's name off because I felt bad for them. Okay? Right? I felt bad for them. Look at this crap. This is actually how people treat trading. I'm going to have a heart attack. I'm down 2,000. I don't know what to do. Hold or cut my losses. I'm now down 4,000. I'm down 4,000 an hour. What should I mean, are you kidding me? And the sad thing is, many of you listening have had an experience like this. Maybe better, maybe worse. Maybe not this bad, maybe way worse than this. This isn't trading. This is gambling. And this is why this industry gets such a bad name. Okay? It gets a bad name because way too many people do this. Then they post it on social media, and all the gurus out there are like, well, one, that's easy pickings. You know, they're going to tell you how to get rich quick if you just take my course. Or the other people that aren't traders are looking at this going, those traders are a bunch of hackers. And you're right. Most of them are. Right? That's it. Graveyard is full of traders trying to catch a falling knife. Amen. It's well said. And this is a prime example of it. Okay? So again, one last reminder before we start building the plan. This was a short trade. Not a long trade. Some of you go, wow, what a nice play. It wasn't a long trade. It was a short play. Under 73.80 was a base breakdown that dropped about 10 cents. And then, well, let's just say it went the other direction. You take your stop loss, you lose your whatever your risk is, $100, $200, $500, you lose it and you move on. But if you hold on, you're going to be drinking the hopium because there's nothing else you could do at that point, right? Just as just a friendly reminder, take your stop losses, okay? Take your stop losses. All right, so let's talk about what's in a trading plan, things you need to consider, okay, when you are building a plan. A trading plan is a written set of rules that defines how and when you will place trades and includes the following sections. Okay, you could add some more. Markets that will be traded, charts and indicators that will be used, account and position sizing rules, entry rules, exit rules, and continuing education. You could also say follow-up, which is in here, journaling and tracking trades. So I'm fairly flexible, guys. I trade stocks. I don't trade Forex. I don't trade E-minis. I don't trade futures. I do not trade crypto. I don't trade binary. I just trade good old-fashioned stocks, okay? Generally speaking, that means 98% of my trades are NASDAQ or New York stocks. Occasionally, we'll trade an Amex stock, all right? So for many of you, this is easy. The markets that were traded, you trade stocks. I'm going to trade NASDAQ and New York because that will accompany most of the stocks in the known universe, okay? Now, if you trade Forex, what currencies are you going to focus on? So instead of markets that will be traded, you'll focus on the Forex market, but maybe you'll trade, I don't know, dollar, yen, or something, all right? Maybe you'll have 3 or 4 currency pairs that you like to trade, all right? If you're trading E-minis, you're going to trade the NQ, the YM, the ES, whatever, okay? This is pretty simple and straightforward. Okay. Then you go down to the next and you say, all right, what am I going to focus on? Now, hear me out on this. This is important. Are you going to be a scalp trader where you're going to trade an hour a day and focus on 2-minute, 5-minute charts? Are you going to be a core trader where you're focusing on weekly and monthly charts and you're holding stocks for a month, 2 months, 3 months at a time? Are you going to be a swing trader where you're focusing on 60-minute and daily charts, occasionally a weekly? Okay, you have to decide what style you feel fits your personality and your time constraints and your financial constraints. That's a slide in professional trading strategies that I didn't put in here, right? Think about your time constraints. Can you trade the market open? All right, if so, all right, what are your personality traits? Are you a jittery person? If so, you might want to start with a 2-minute chart. If you're a more patient person, maybe you can intraday trade with a 15-minute chart. But you need to think about those things I talked about. Your personality traits, your time constraints, heck, even your financial constraints. Some people that are US-based traders don't have 25 grand, and that means they can only take 3 trades a week. Well, if that's the case, you're probably going to be a swing trader, all right, unless you're trading with a prop firm or an offshore brokerage. If you're an international person, none of this matters. You can do anything you want. Okay, I don't use trend lines or really moving averages very much, but decide on what types of indicators you want to use. Okay, account and position sizing rules. What this means is not just your risk level, but what are the rules for how you're going to get from A to B. So if you're at $10 risk per trade, which you should be when you're new, how are you going to get from 10 to say $500 risk? What are the parameters you're going to use to get there? Make sense? For example, you might put a rule in your trading plan that says, if I have 3 consecutive months of profitability, and profitability needs to be defined. Okay, so for example, if you're risking $10, you say, if I may have 3 consecutive months of 10R, 10R would be 10 times 10, right? So that would be $100. In that case, I'm using just a rudimentary case. So if you made $100 for 3 months in a row on $10 risk, you say, I'm allowed to move to $25 risk. And then if I have $25 risk for 3 months in a row, if I make 10 to 1 again, so that would be 2, now I can move to $50 risk, and then 50 to 100, and 100 to 200, and et cetera, and so forth. And you could see how long it would take you to get from $10 to say 2 or 3 or 400. It could take you 2 years. That's okay. It's supposed to take you that long. Then you're going to have the opposite, maximum drawdown rules. What if you lose X amount per day, per week, per month. Most of you guys, you don't follow this stuff. A lot of people I've met have a maximum daily loss defined. I'll lose 3 to 1, and if I lose 3 to 1, I'm done. So if I'm risking $10 a trade and I lose $30, I'm finished for the day. But they don't have a maximum weekly drawdown, and they definitely don't have a maximum monthly drawdown. My opinion for you guys is your maximum daily should be no more than 3 to 1. So if you're risking $1,000 a trade and you hit minus 3,000, you are done for the day. If you're risking $50 a trade and you hit minus 150, you're done for the day. Your maximum weekly should be double your maximum daily. So if your maximum daily is 3, your maximum weekly should be 6. Your monthly, you could be up to 8 to 10. So your maximum monthly drawdown should be about triple what your maximum daily. And then the question becomes, well, what happens if? What happens if 2 weeks into the month you hit your maximum monthly drawdown? 2 weeks in, the month's only halfway finished. You're done for the month. You go back to simulator at that point. You go back to simulator because clearly something is wrong. You are missing something. To be down 8, 9, 10 R, 2 weeks into a month, something is wrong. That goes back to, hold on, this. Measure and assess. You're in the assessment phase going, what is happening? What have I done wrong? Am I not following the rules of my plan with regard to needing a bottoming tail or a green bar or the volume? Am I not following those rules? But I need to go back and assess why I could possibly be down this much in such a short period of time. And while you're assessing that, you're going to be in simulator. You've lost, you've given up your right to trade real money, right? Because you haven't done a good enough job with it, right? So you earn the right to raise risk. Well, if you have a bad enough stretch, you should lower risk, period. I get it. Most of you won't do this. Your ego's too big and you won't do it. A prop firm, Kumar, somebody's asking what is a prop firm? It's a proprietary trading firm where you have to get a Series 57 license. You can usually open an account for like $3,000, $4,000, but then you have your FINRA and SEC regulated. You have to show them other accounts that you have, IRAs, 401ks. They get to take a look at that stuff. You have continuing education. You got to pay the broker or the prop firm a percentage of your profits and all that stuff. I'm not going to get into it now, but that's what it is. Okay, so back to this. So your account position sizing rules are very, very, very important because it's what's going to keep you solvent. If you don't adhere to this, your account will be severely damaged. Okay, so now we come into the area I find a lot of traders are not specific enough. Entry and exit rules, okay? Trade filters, time, pattern, environment, liquidity, spread, etc. I review trading plans frequently. Most of them are far too vague. And when you're new and your plan is too gray or too vague, I find that people take advantage of themselves. Okay, when something's not clearly defined, you use that, you know, they kind of use that expression, you give them an inch, they take a mile. Exactly what happens, particularly with ourselves. So don't let yourself be in the position to do that, which means be very, very specific. So when you take professional trading strategies, these trade filters are extremely well defined, right? We call them pattern boosters. For example, you might say, okay, I'll just give you an example. I will only trade from 9:30 to 10:30 a.m. I will not trade after 10:30 unless I'm in a position I'll manage it out. But I will not take, thanks Jenna, but I will not take a new trade after 10:30. I'm not saying this is a rule. I'm just using an example. I will trade 9:30 to 10:30. I will only allow myself 4 trades per day, no matter what, okay? Of those trades, the patterns I'm going to trade will be, for example, the 3-bar play and a buy setup. So now we've chosen the time parameters in which you're going to trade, 9:30 to 10 o'clock. We've chosen how many trades you're allowed to take, 4. We've defined the pattern you're going to take, 3-bar play and buy setups. Next level, what defines a 3-bar play? Well, this is what defines a 3-bar play, right? Wide bar, narrow bar, breakout. But That's not that simple. What does the wide bar igniting bar actually mean? A wide range igniting bar actually mean? First or second bar of a move. Let's look to the one on the right hand side here. We're breaking below double bottom support, okay? It's the widest bar you've seen on the entire chart, so it qualifies as a wide range bar. It's below support, okay, that's good. And it has what below? Void below. That's good, but that's only the first bar, all right? Now the second bar has to be what? A narrow range resting bar that cannot penetrate the low of bar number 1. It has to be a narrow range resting bar. I don't care what the color of the bar is. It could be red in this case. It could be green in this case. It could have a topping tail. It could have a bottom. I don't care. But it has to be in the lower 30%, lower 50% of bar number 1. This qualifies. Entry will be on the third bar in this case. Stop will be above bar number 2's high. You have to define these things very specifically. Very specifically. Otherwise, you will start taking garbage. And here's the best way you can do it. Don't just define them on paper. Define them on paper and then put a picture of it in your trading plan. I'll repeat. Define them on paper, specific criteria that you must have before you take the trade, and then put a picture of it. You know why? Because a picture is worth 1,000 words. And I tell this to you guys every day in the room. Don't take the trade unless the picture in your plan or the picture on your wall looks exactly like what you're about to trade. Most people don't do this. How do I know this? Because I get some crazy questions in here. Hey, Jared, check out this 3-bar play. It looks nothing like a 3-bar play. Guys, do you realize that pattern recognition, picture recognition is something a 5-year-old can do? True or false? I have a 6-year-old daughter. If I put in the room a triangle that's red, a ball that's purple, and a rectangle that's blue, and I asked her to go find the red triangle, she could do it. Especially, wait for it, especially if I printed out a picture of a red triangle and I said, go find this picture in your bedroom. Right? I have 3 toys on the floor. One's a red triangle, one's a blue ball, one's a purple rectangle. And I gave her a picture in her hand of a red triangle and I said, go to your room and find this. Your 5-year-old kid could do it. So why can't you guys do it? I'll tell you why. Because you don't do it. You don't put a picture of this on your wall. I don't care if it's an 8x11 picture. I don't care if it's poster sized. But on your trading desk, there should be a picture of the patterns that you like to trade in their perfect ideal form. And when you go to take a trade, you glance at the wall and look at that picture and go, is what I'm looking at on my computer screen the same as what I'm looking at on my wall? Okay? And then if the answer is yes, you take it. If the answer is no, you move along. Oh, aha moments. Rocket science. It's not. It's simple pattern recognition. Okay? I do not have a preferred time frame for the 3-bar play. It can happen anytime, anywhere, all day long. And that's true for all trades. Okay? So we go back to this. So now we're filtering things in to make things as specific and detailed as possible. The time in which we're going to trade. How many trades we can take. The patterns we're going to take. 3-bar plays, buy setups. And then inside of those patterns, what criteria we need. For example, I might want a buy setup to have a 50% retracement at minor support or level 2 support with a bottoming tail, increased volume, uptrending on the daily chart or the 60-minute chart in a market that's moving higher. Everything I add not only makes the trade more specific, it makes the trade more reliable. Right? It makes the trade more reliable. And don't you want more reliable trades? Of course you do. Most of you are too lazy to find them, or you're that FOMO. Oh, it's dangerous. Fear of missing out. I got to take it. I got to take it. No, you don't. There will be another one that looks just like it. Okay? There will be another one that looks just like it in 5 minutes, 10 minutes, tomorrow, the next day, next week. It doesn't matter. Make sure the picture on your wall matches the picture on your screen. It's real money, guys. Okay? Liquidity. Have volume requirements for your trades. I won't take a trade that's gonna do less than 1 million shares a day. And you break it down. Say, okay, by 9:35 a.m. I'd like to see 200,000 shares. By 10 a.m. I'd like to see 500,000 shares. All right? By 10:30 I'd like to see 700,000. Break it down. And that means you can't take it unless it has that amount of volume. Spread. You might say, here's a rule I have in my trading plan. I cannot take a trade in which the spread is more than 35% of the size of the stop loss. What this means is, if I have a trade, and let's go back real quick, Entry, stop, and target. So, if my entry is $167, hypothetical, and my stop is $166, that's a $1 stop loss. $1 stop loss. That means the spread on that trade cannot be bigger than 35 cents. And that's a lot. I don't like taking those. But the spread cannot be bigger than 35 cents, or else it's too spready and I will not take the trade. And preferably, I don't even want it that spready. So even if everything else checks out, the bottoming tail, the buy setup, the volume, the support area, the market, even the liquidity of the stock, meaning it's got tons of volume on the stock, but the spread is too big, I won't take it. This is how we dwindle down our trades so that we can be very specific with our entries. And you guys see it happen in the chat room all the time. Yeah, I like this about the trade, but that's going to keep me out of it. And here's the thing I tell people. I don't look for reasons to buy stocks. I look for reasons not to take the trade. Right? The reasons to buy them become obvious after a while. I need to find the one or two things, the reasons I wouldn't. And if I can't come up with a reason to not take it, then I take it. Okay? Now, you also need exit rules. Okay? Trade management considerations. What are your profit targets? What are your stop loss levels? Time exits. Some people will literally have time stops. I don't. Right? So your exit rules are how you're going to manage. Are you going to do 2R all or nothing? Are you going to do bar by bar? Are you going to do a hybrid approach? I've seen some traders say, all right, at 1R, 1-to-1 profit, I will sell half my position, and on the back half, I'll do 15-minute bar by bar. I've seen some traders say, I will trail up on a 2-minute bar by bar, my first 1/3, and then the second third and third, I'll do on 5-minute pivots. Okay? So all of these things are very important. And you notice as we go down this checklist, and guys, in professional trading strategies, this is an entire chapter. It's like 50 pages. I'm going over like 5 of these pages in 45 minutes versus 4 hours. Okay? I'm telling you this because as we go down the checklist, we're getting more specific. And what do you do when you get more specific? Not only do you become more accurate, but your universe of stocks goes from like 1,000 to like 50. And then of those 50, you might only take 5 of those. So you're making your life so much easier. Just think of this silly comment. Think of those 1,000 stocks, how many you could just get off your list, filter out just by volume. Right? Say you have 1,000 stocks and you go, well, I need at least an average daily volume of 1 million shares. Well, now you just cut half of them out, at least, maybe more. And then you filter them out by spread. Then you filter them out by price. Maybe you say, I don't want to take stocks over $100. I don't have that filter, but you might. Now all of a sudden, that 1,000 comes down to 100. And all of a sudden, by the time you've filtered everything out using your trading plan rules, you're down to your best 20 stocks. And then of those 20, now you're waiting for the perfect entry rule. And of those 20, you might only find 3. That's how you become a systematic, methodical trader. All right? And then at the end of the day, guys, you have to track your trades. I'm going to show you this in just a second. Okay? Journal your trades and track your trades. Okay? Because that goes back to How are you going to actually measure this if you don't track them? Why do professional football teams have so many people on their analytics staff? Why does baseball use sabermetrics now, whether you like it or not? Why? Because it's proven that it works. Well, if you're not measuring anything, how can you assess it? You can't just say win or loser. You need to assess it, and so as you need to measure those things within the confines of when you took the trade, the market environment in which you took the trade. Okay? Did you take the trade at 1 p.m. or 10 a.m.? And you might find trades don't work as well at 1 p.m. as they do at 10 a.m. So what do? Stop trading at 1 p.m. That would be one example. All right? One example of improving your trading. Using the measurements, assessing the measurements, and then making adjustments to improve. Okay? That's part of continuing education, which happens at the end of the day. Then you want to talk to other traders, read books, review your manuals, take courses, and then relax when you need to. Go blow the stink off. Go play golf. Go out with your friends drinking. Go watch a football game. Do whatever it is that you need to do when you need a break. Because we all need a break. The business can be stressful, right? It can be stressful. But continuing education is just as important as everything else. Spend an hour or two a day doing this, okay? And remember, take a picture of those trades, guys. Put them on your wall. And when you go to take a trade, make sure it matches the picture. Make sure it matches the picture. All right. Now, journaling. This is really important. The goal of a journal, trading journal, like a diary, so to speak, is to capture the thought process. I'm not as interested necessarily in what happened. I'm interested in why it happened. So you may have taken a really bad trade. I just want to know why you took a bad trade. The fact that you took a bad trade isn't that bad in and of itself. One bad trade, we all do it. But why? What was going through your mind to allow you to take that trade? Okay? I want to know your emotional state of mind. For example, you may have had a stock that almost hit target, went completely against you and stopped you out. And before that trade, you might have had a stock that triggered you in by a penny and then failed. So now you're pissed off. And then you go and take a really crappy trade. Why? Because you're upset at the previous two trades and now you're in the somewhat revenge trading business. I need to get my money back. So that would help explain why you took such a bad trade on trade number 3. Now you're going to say, asking, well, Jared, so what? It's important because now you can be what we call mindful. Mindfulness is being aware of your emotions in real time as they happen. Why is this important? It's important because if you see a pattern of yourself doing stupid things after losses, it will help you become more mindful of that scenario when it happens. So let's say you took a good trade and it didn't work. Now you know you're more susceptible to being stupid. Your emotional state of mind is not as clear because the first trade loss has messed with your mental game. So now, if you're mindful, you're more aware of this and you're less likely to do it again. But if you're not tracking that, what your thought process is in the middle of a trade, jotting some notes down or recording yourself, you'll never know. See where we're getting at, guys? This business is no joke, man. It's pretty serious. You need to treat it that way. So then at least later you can go back and assess your psychological strengths and weaknesses. And you're also going to see trigger points. I hate that word. I got triggered. You need safe spaces nowadays for college kids. It's pathetic, but that's a different topic. But you'll see trigger points. For example, another trigger point. You take one winning trade in the first 5 minutes of the day, you make your 500 or 1,000 bucks, you never take another trade. That's being mindful that you become complacent after winning trades, and after losing trades, you push the button more than you should. You're assessing your psychological strengths and weaknesses. And why is that important? So we can go back to our planning cycle and assess what has happened so we can make improvements upon it. Okay? Starting to see how this is becoming more and more and more and more like a business. right? Okay. So not last thing. I forgot to add this slide in earlier. Objectives. Your trading plan should have objectives. Okay. What your batting average, what you're hoping your batting average will be, and what that batting average and Sharpe ratio will turn into. Sharpe ratio, guys, is basically the same as win-loss ratio. I'm not going to get into it right now, but it's basically you take your average winner divided by your average loser, and that's your Sharpe ratio. If your average loser is $100 and your average winner is $200, you have a 2.0 Sharpe ratio. Your average winner is 2 times your average loser. If your average loser is $50 and your average winner is $75, then your Sharpe ratio is about 1.5. Okay? Never risk more than 1% of your account, even though you should only be risking $10 when you're new, blah, blah, blah. I'm not even going to get into this right now. I got more stuff to do. So, daily journal. You can use a notebook, a binder. I think nowadays you should just use PowerPoint, in my opinion, so you don't have to waste so much paper. Just use Microsoft PowerPoint. Okay? Winning trades, losing trades, and other trades. You can make a binder if you want, print them out if you want. It's always good to look at this stuff when you're traveling, right? Print out your last 30 trades. Take a look at them because this is what they should look like. You mark them up. You take the pattern on the time frame in which you took it, then the higher time frame, and then you should also include, I don't have it here, but you should also include the market. So hear me out. We use the top-down approach, right, which means we always look at the 60-minute chart or the daily chart before we take an intraday trade on a 2-minute or a 5-minute. We always look at the 60 and the daily. So what do you want to do? In your journaling, you want to put on the daily chart of the stock you traded, inlay it over top of the time frame you took. In this case, it's a 5-minute chart. So you took a 5-minute trade, inlay the daily chart. I want to know what the daily looks like. And if you have space, inlay the market on a 5-minute, like the Qs or the SPY. I want to know, was the market going against me? Was the market helping? Was the market hurting me? Those 3 things are important. The time frame in which you took the trade, in this case 5-minute, the daily chart of the stock, and the 5-minute of the market. So we have a base breakout here. Cool. Looks good. Daily looks good. No issues. Entry was 79.01. The stop was 78.85. The target 1 was 1.5 R, and the target 2 is 5-minute pivots. Shares, 3,100 shares. Risk, $500. Okay. Those are just the empirical data. That's the entry. That's the stop. That's what the intended target is. That's how many shares you bought, and that's the risk. So you're going to type that all in. Good. Could you print it out and literally use a pencil to mark it up? Sure you could. Okay. And then the comments are more important. Beautiful pattern made possible by the nice daily gap and timed with the market. Proper entry, proper share size anticipated to get filled. Okay, that's good enough. If you want to be more specific, like it was a consolidation back to the rising moving average, at a reversal time or whatever, you could do all that. Depends on how detailed you want to be. Sold the back half at $80 or 6R before my plan says to, because I've never been up $3,000 on an intraday trade before, and the wide range bar scared me. Interesting. I was very nervous about giving back any money. See, the green lines are where you should be raising your stop, because it says target 2 is 5-minute pivots. And we're talking about the back half here. So you should have managed this out on pivots. Moves up, pulls back, moves up, raise your stop. 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 You should have been getting out of this thing no earlier than 80.20, which is $1.20. Okay? But you got out of the back half at $80. Why? That wide range bar scared you. Right? You're sitting there going, oh man, I've never been up more than 6-1. So what are you doing here? You're learning about yourself. You're learning the thought process which led to you getting out too soon. Why is this important? So that you can go back, let's do it one more time, and assess and make improvements because of the assessment you made. Go, okay, well, it seems to me that 5 or 6R is a tough spot. Therefore, perhaps add something in here. Instead of doing half and half, this is just a suggestion. Maybe take 1/3 at 1.5R, and when you get to 5 or 6R, take another third off, and guess what? It'll make holding that last third a lot easier on those pivots, won't it? It'll make it a lot easier. So that would potentially be a small adjustment you could make to your plan. Not a major adjustment, a small adjustment. that says, okay, I'm going to sell a third at 1.5R, but if I do get up 5 or 6R in this case, I know previously I got nervous. Therefore, to mitigate the nervousness, I'm going to take a little bit more off in that area and let at least 1/3 run. Now, this is what's important here, guys. It's not perfect because your plan says to hold half on pivots, but you're not doing that. You're selling before you're supposed to be selling. So, how do we bridge the gap? We find a balance. And the balance is selling a third. So now, even though we should be holding a half to a bigger target, we know that we're not capable of doing this because we've tried and we failed. Therefore, instead of going from Glass Joe to Mike Tyson, we're going to go from Glass Joe to Soda Popinski. That's a reasonable compromise for now. And then as you become more comfortable holding for bigger targets over time and learning and patience and discipline, you might say, I don't need to sell 1/3 at 5 or 6R anymore. I'm going to actually hold that back half. Do you see where we're getting at? We're making slow progress to get to the ultimate goal, but we're learning along the way. So I'm not going to get half to that full target without selling a third somewhere in the middle. And you know this, so that's your compromise. Sell in third lots instead of half lots. A third at 1.5R, a third at 5 or 6R, and then a third on pivots. Boom. That's a fair compromise. So in this case, though, you realize, wow, not following my plan cost me 3R or $1,500. What does it say? I need to add a rule in my plan about 5R moves. Perhaps go to bar by bar at 5R, still adjusting to the new risk level. So in the future, instead of giving up 1,500, we might give up 700. It's better than 1,500, isn't it? It's not perfect, but it's a compromise. So this case, we gave up 1,500. Next time, we might give up 700. We still improved upon our plan by $800, didn't we? That's it. Now, what you're going to do with all this empirical data, the empirical data is here. You're going to put this in a trade tracking spreadsheet. Okay? Guys, you can buy these online. I think if you just Google trade tracking spreadsheets, I think it's what's called tradingspreadsheets.com. They make some really nice ones. I made this one years ago for myself, probably 10 years ago now. And you'll see it tracks a lot of things. The whole spreadsheet's not actually on here. But what you're going to see, and I'm going to go over it quickly because, well, I'm running out of time. I got about 3 more slides I want to get through, and I'm already 10 minutes past. Okay. Note, the report range. I can do anything I want. I can do 1 day, 2 days, 10 days, whatever. You just type in the range, and it'll give you the data for that range. During this particular range, you can see it's me and Unmall. Okay. There were 11 trades. There were 9 winners and 2 losers. The average winner was about 1,400, and the average loser was 1,000. The risk is 1,000, so the average loser, this is about right. I suppose it could be a little less, but sometimes there's slippage. And the average winner is 1,400. So our Sharpe ratio here is 1.4 to 1 gross. The net Sharpe ratio is 1.3. Actually, no, it's right, 1.3, because the average loser is a little more than 1,000. Okay? But the batting average is 82%. So you can get away with a really mediocre Sharpe ratio. If your batting average is 50%, 1.3 Sharpe ratio is not that good. That's your win-loss ratio. Sharpe ratio simply is your average winner divided by your average loser. Okay? So remember, the lower the Sharpe ratio, the higher the batting average has to be. The higher the Sharpe ratio, the lower the batting. If you have a 3.0 Sharpe ratio, you could have a 35% batting average and make money. But anyway, so you have the month, day, year, the source, meaning who took it, the stock symbol, the time you got in. You could also have the time you got out if you want. Whether it was long or short, L or S, long or short, how many shares you took, the entry price, the stop loss, how many shares you sold, the exit price. Now, for some of you, you're going to have 2 or 3 exits, okay? And you'll type that in. The size of the stop loss, the risk on the trade, how many points you made, how much money you made, and the R you made. Basic information, okay? Basic information. But where we get more detailed is the next slide. Now all of a sudden, we have a report. You're not going to see it today, but this report is 3 pages long. This is only 1 page. There's 2 more pages to this. So what does it tell us? A more detailed look inside what we did. 1 trading day, 11 trades, 9 wins, 2 losses. This is the total amount the winners made. The average winner's right there. The best winner was right there. This is the total amount of the losses, the average loss and the worst loss. So it tells you all in all, gross profit was $10,453. Average gross profit was $950. This means all trades. If you took all trades, winners and losers, you made $950 for every time you push the button. So that confuses some of you. That means every time on every one of those 11 trades, we made $950. Even though we lost on some of them, you took the winners and the losers put together, you made $950 every trade. Batting average 82%, sharp ratio. Now let's go deeper. How do we do on longs versus shorts? Well, we took 10 longs and 1 short. Okay? We had an 80% batting average on the longs, 100% batting average on the shorts. Now, guys, this is one day on 11 trades. Imagine how useful this information becomes when you have 1,000 trades. And what if you find that your batting average on short trades is 24% and your batting average on long trades is 64%? Well, in and of itself, that might be very significant. We'd have to take a look at the market environment. But if the market environment during that time was flat or mediocre, you have to figure out why you don't do well on short trades. What are we doing? We're refining our trading. We're getting better. We're trying to maximize our strengths and minimize our weakness. You might come to a point where you say, I'm just not very good at short trades. I'm going to eliminate all short trades from my plan. I'm not saying you should. I'm just saying that that might be your hypothesis when you're done. Time frame, 1 minute, 2 minute, 5, 15, 16. So notice, 2 of those 11 trades were on 1 minute charts. 8 of them were on 2 minute charts. 1 of them was a 5 minute, and it has the same information. Batting average. So we didn't do as well on the 1 minute charts, 50%. We did really well on the 2 minute chart, 88% on 8 trades. We're refining it. Buy setups, sell setups, okay? 3-bar plays, right there it is. Bull 3-bar play, bear 3-bar play, highs, lows, retest, climactic reversals. We took 4 buy setups, 3 breakouts, 3 highs, 1 retest. How do we do? You might find out that you do really well on 3-bar plays, but really poorly on buy setups. We're refining our trading. Each level we go deeper. And then personal statistics, how I did versus how Unmal did. Unmal did way better than I did, right? In this particular case, I made $1,500. He made $8,800 on the same number of trades. Why? We had the same batting average, okay? But his sharp ratio was triple mine. Well, if I'm looking, remember, it's one day. But if I'm seeing the same trend over 1,000 trades, I'm going to go, why are you selling so soon, Jared? Go back and take a look at it. Guys, this is 3 pages long. You're only seeing 1 page of it. These are the things you need to do to improve and fine-tune your trading. Okay? All right. So let's get to the end here, guys. Couple more slides. I got to wrap this up. General trading rules. This is a slide you probably want to look at in detail or copy it. Every trade must have an entry, stop, and a target before entry. Every trade has a predefined risk level that must remain consistent. This means if you're risking $10 on the first trade, you're going to risk $10 on every trade. Okay, all week, all month, all year until you meet those criteria where you're allowed to raise your risk. We don't change the risk, okay, just because you feel like it. I will always be objective. If I feel myself becoming emotional, I will take a walk or I will walk away from my computer. I will not take a trade unless it has a clearly defined strategy as outlined in this plan. Right? When a trade is clear and meets my plan's requirements, I will take it without hesitation, assuming my money management threshold has not been met. So if you're minus 3R for the day and you say a perfect pattern that meets your plan and it's perfect, guess what? Can't take it. Why? You hit your max loss for the day. If you're down 3R, 3-1 for the day because you were, didn't do well, doesn't matter how perfect the next trade is, you can't take it. But if you're having a good day, maybe you're up 2R and you see another trade, you take it. You take it. I will first master the strategies in this plan before experimenting with new ones. Guys, start with 2 patterns. Start with 2 patterns, and when you become outstanding at those, you can add to your toolbox. Okay? You learn how to change the oil on a car before you learn how to rip the engine apart. Baby steps, okay? Become a master of 1 or 2 things rather than a jack of all trade and a master of nothing. I will strictly adhere to my money management rules laid forth in this plan. Money management is your #1 goal. I will not take a trade unless it has 2-to-1 risk to reward, right? If it can't give me at least 2-to-1 on the chart, if there's not enough room to get 2-to-1, I won't take it, okay? I will not trade after 3:30 p.m. Now remember, I don't trade after 11 o'clock, 10:30, but these are just general rules. I will sit on hands when the odds are against me and there's nothing to trade. I won't do anything. I won't force a trade is what this is saying. If I can't find something that looks like the picture on my wall and meets my plan's requirements, I will not take it. I will faithfully track all my trades and learn from my mistakes. We just showed you how to track your trades. I will never make excuses for my shortcomings. Rather, I will embrace them and learn from them. Guys, you know what this is called? The victim mentality. When you make excuses for stupid stuff you do, or you think it's the universe that's against you, or the market that's against you, or it's society that's against you, or the government, you're a victim. There are no victims in the United States of America, period. Now, I know I'm talking to people from all over the world, but there are no victims. You make your own lot in life. Some people start ahead of you in terms of having a better family structure or being in a different country. I get all that, but you can become, all right, you can be great, all right? Just don't be a victim. Take responsibility for your own actions, okay? I will never violate my trading plan rules, okay? All right, I will never violate my trading plan rules. Guys, read this every day. Recite it to yourself every day, okay? And last but not least, well, there's actually one more slide after this. Psychology, guys, is 99% of success in this business. If you can't manage yourself, you'll never succeed. I'll repeat it. If you can't manage yourself, you'll never succeed. All right? So you must be objective at all times. And the key to being objective and managing yourself is discipline. And how do you get discipline? By building a trading plan that complements your personality and does not go directly against your personality. Okay? If you're an impatient trader, don't try to hold for 15-minute pivots. Try to make money on 2-minute charts in 30 minutes by using smaller targets with higher accuracy. What are you doing? For example, I'm a really good stock picker. I'm a terrible trade manager. That's a fact. I am not a good trade manager. Unwall's a better trade manager than I am, but I'm a really good stock picker. You guys notice I'm not wrong as often as maybe some other people, but my management stinks. I'm maximizing the strength of picking stocks to minimize a weakness so I don't shoot for big targets. You have to do the same, okay? You have to do the same. And last comment in closing. You're not special, okay? You're not special. I know somebody's going to say, we're all God's special children. Maybe. But in trading, you're not. Don't come in and think you're going to get this in 3 to 6 months. You will not. There's going to be 1 out of 1,000 that proves me wrong. The rest of you won't, and it's not you, okay? You're not different. Okay, assuming so is very, very dangerous. It's going to take you 1 to 3 years to get good at this. Be conservative when planning. Okay, be very conservative. Plan for the long haul. Keep your day job. Statistically speaking, guys, less than 8% of people in the United States of America make $100,000 per year or more. Household income, it's more than 8, but individually, about 8% of people in this country make 8%. Trading numbers are even lower. What's the point in saying all this? That's people with college degrees and training from high-level businesses. And still 92% don't get there. Wow. What does this mean? You're not different. Assuming so is very dangerous. Give yourself the proper time it takes to succeed. All right? Compared to other businesses, guys, the startup costs in this business are cheap, man. They really are cheap. Go try to open up a Chick-fil-A or a McDonald's or a Subway. Go open up a construction business. You need trucks, you need hammers, you need tools. Go open up a car shop, a repair shop. Go buy a gas station. Go buy a car care center. Ask Unwall how that goes. It's a pain in the ass. $10, $12, $15 an hour employees, breaking stuff, taking customers' cars on joyrides, insurance, taxes, property taxes. You're doing this from your house most likely. Sweet. It's the greatest business there is on the planet. But because it's that great, it's also that challenging. And the startup costs are cheap. All right? Be reasonable with yourself, guys. Use common sense. 10, 20% a month, great returns. All right? And last, don't let your expectations exceed your experience. So go back. One last comment before I end this up. Use this planning cycle to fine-tune your plan. And remember, Don't force a plan upon yourself that does not consider your personality first. Let me repeat this. Don't force a plan upon yourself that doesn't consider your personality first. Now, you may not know that when you haven't traded yet, right? You'll learn that as you push the button more and more times, but don't ignore that stuff. You sit there and go, man, I keep selling too soon. All right, let's work on that. Let's work on how we can not sell too soon. Maybe set a bracket order and walk away. Maybe have somebody review my trading. Maybe record my trading. Maybe have somebody sit next to me when I'm trading. Or maybe I'll just shoot for smaller targets. There's ways around these things. Nobody's perfect, guys. Okay? So I hope you guys enjoyed that lecture on building a trading plan. I think there's some valuable information in there. I went about 30 minutes past what I expected to do. But I hope it will help you guys build more detailed, more accurate trading plans, which will in turn make you more money and give you a better opportunity to succeed in this business. Okay? To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.